It's October 5th, 2022, and coming to you from California. It's 2:23 p.m. on the West Coast, and I'm going to do an account review. After do the account review, we're going to look at some charts, and see what's driving the market. I'm going to list some of the most important companies in the S&P 500 and compare it to the index, and give you an overview, very high, like 10 million foot view from the economy. Okay, that's a little too high, but you get the point. I'm going to go through all my positions, everything, options, account status, do relative comparison to the market of my account, which I'm losing as of late, and then we'll talk about the market. So if you want to skip to the market part, just click on when you see my face zoomed in again like this, and that's when I'll begin. So going into the markets, my account, I am 157,000 at the moment. The low point of the day was 150K, which is about a loss of $8,500 or 5.38%, but the market rallied, and my account as well, since I'm a bit levered, in fact quite a bit levered, you'll see in a minute why. So this is the 1 day performance here. I'll go through all the other time periods in a second. So first, I'm going to list all my positions. I'm going to go through it pretty quickly, and then you can, of course, pause the video player at any moment to find out the exact positions. By the way, there's no edits here, so just sorry, just one shot all the way through, just like Drake, one shot Drake. You know what I mean? So, and if you listen to Drake, I don't know. So equities, these are the options plays. I have a lot of ADRs, by the way. They did okay today. And then I have the the equities. Apple here squeaking out a green day, barely. It was up almost like 0.7% at one point, but it decided to correct at the very end of the day. Main Street Capital, I actually stacked a few more shares of Main Street Capital throughout the day during the low point here in the morning. I think maybe I bought 10 more shares, putting me at 921. So I'm expecting, I think the ex-dividend date is maybe on the 6th, tomorrow. So I'm expecting quite a big dividend from them. We'll see if I can get to 1,000 shares pretty soon. That will be really nice. Paramount continued to disappoint. I have 1,200 shares, and they've been doing just terrible. In fact, let's click on it real quick to see how they're doing. This is the 1 week chart of Paramount. It's about flat. But look at this 1 month chart down 12%, 3 month down 20.9%. I'm sorry, 19.9%, which is almost 20. 1 year chart is down half. And this is what the 5 year chart. This is the Bill Huang. Right? Was it Bill? William Huang? I don't know. The dude, the Archegos dude. This is the run up here all the way back in March 19, 2021. And then, of course, the big correction. I thought it was going to grind around the $40 mark, but apparently it doesn't want to, so it's under 20 now. I stacked up probably around the $30 mark here, and well, actually you can see that my average cost is 28.73, which is quite a bit higher than now, which is bad news. Bad news bears. I do have a lot of shares, so relative to me, maybe not a lot of shares for you. Look at this price to earnings, 3.89. Dividend is huge at 5%. I just got $288 from them and rolled a lot of that in Main Street Capital. So anyway, Paramount not doing too well. Smith & Wesson struggling as well. I don't think it's going to drop too much lower than this. It's been hovering around the $10 mark. It doesn't really want to stay below $10 for too long, it seems. This is the 5 year chart, sorry. Let's go to the 1 year. It dipped briefly, I think. Let me see. Maybe not. I don't think maybe it didn't dip below $10 at all. But anyways, I needed to stand above $10. Otherwise, I'm going to own another 500 shares of Smith & Wesson because they've sold like $5-10 puts. So anyway, so this is the account here. Apple, Realty Income, Main Street, Paramount, and Smith & Wesson are the only positions I have at the moment. I'm going to go to the investing tab, and it looks like I'm sitting at 41.22% leverage, or $109,000 borrowed from Robinhood accounts. I'm quite levered. My margin maintenance, someone had a question about my margin maintenance. I'm sitting at 138,279.35 at the moment. So if I go below that, I'm going to start getting margin called. I don't think I'm gonna go down another $20,000, but it could happen. Could happen. I'm seeing some turnaround positive signs, which I'll talk about in a second. But this is the account. Okay, let's sort the equity positions by size. I have Apple at number one, 103,000. Smith and Wesson, 82K, and any tooth decay. What did I say? 82K. Main Street Capital, 32,000. Realty Income, 23. Paramount, 23. So pretty large positions, all of them. Let's go into some relative comparison here. So on the day, I've been losing very hard to the market in the last month. I don't know about the last 3 months, we'll find out. But on the day, I'm down 1.23%, which is lower than all the market indexes. 1 week, I'm up 1.43. On the month, I'm down 17%. 3 months, 13%. Year to date, 15.51. Oh, that's bad. I used to be positive. 1 year, I used to be very positive. Now I'm about flat. And then all time, I always have to disclose that I started investing here on about August 28, 2018. And where is August? And that's why it looks so flat beforehand. But it looks like I'm still up, 117%. Let's subtract 3%, 114% over the last 4 years, let's say. All right, so let's see the S&P 500, which is a SPY. It's a ETF, an exchange traded fund that tracks the top 500 companies by market cap and profitability in the US. So it looks like on the 1 day, I'm losing by a lot. So market's only down 0.22. On the 1 week, losing by like 1%. 1 month, I'm losing by 17%. Really bad. Really bad. On a 3 months, the market's actually positive. I'm not. On 1 month, on 1 year, was that on par? I forget. Oh no, on the 1 year chart, I'm about flat. So I'm actually winning 12% on the year. Year over year. So winning, and market's up 50% over the last 5 years, so beating him there. So in the long term, I'm doing all right, but recently it's been just getting clobbered. The market's just, taking names and just beating me to death here. So not very good news. So that's the account review. Let's take a look at some market internals here. So I'm going to look at some individual names and compare them to how they perform compared to the market. Now, I'm going to use FinViz for this. And what I found out is that there's very few stocks that are actually doing better than the S&P 500 out of the large caps anyways. All right, so if we exclude things like healthcare plans and things like that and energy, then virtually almost all the big important companies are down relative to the index. So let's take a look, Let's take a look at the heat map first of the market to see where we're at. This is today. Tesla had another 3.46% down day. Apparently the news about their production is really hitting the stock. But amazingly, it still hasn't broken down as June support, which is what we're going to talk about in a second. But you can see that everything is pretty mixed today. Let's go in the 1 week performance. So Monday and Tuesday really boosting the performance of the stock markets here. Now this is internet, this is everything. This is not the S&P 500. This is the entire world. This is the S&P 500 here over the 1 week period, but let's just look at the full map. Okay, I want Alibaba in there, etc. So this is the 1 week performance. 1 month, everything's red, except like maybe energy and healthcare. We're gonna look at the healthcare plans in a second. This is 3 month. Energy is holding up the indexes. 6 month, almost everything red except energy. And let's take a look at the 1 year performance. This one really paints a nice picture here. You can really tell what's going on. So Apple is actually holding up fairly well. Microsoft down minus 13%. I don't know why it's not listed here, but so there you go. Now, this is a chart of the S&P 500, And it looks like, if you look at the lower bottom here, this is the June lows, and it looks like it briefly broke down the June lows a couple of times and went all the way down to 350 something on pretty high volume, or relatively high volume, and then a quick bounce back, a quick rejection all the way up to 376. Now, usually these kinds of quick rejections are actually pretty bullish in my estimation. If you're a technician, you can argue with me. I'm not a technician. I have just basic knowledge of technicals, so if you want to argue with me, that's fine. I welcome that argument. People might argue that we're in a downwards channel here, and this upward movement hasn't really broken the channel, so it's still up in the air. But see, that's my issue with technical analysis, is that, like, when you talk to a technician, they're always looking for something. It's like, okay, when we get a confirmation of this and this, and then even when there is a confirmation, it's always like, yeah, but sometimes it could be a fake breakout or whatever, or like so, well, how do you determine the probabilities of that? So technical analysis, I don't know, and it's always changing. Like, which indicator works best at which time period. You really got to be on top of it and see what the markets decide to respect or not. It's a bit messy in my experience, so I don't give too much credence to technical analysis, but it's good it's good for just get an understanding of where the market is at the moment. So anyway, so it looks like there is could be a false breakdown with a rejection rally, or you could see it as forming a new low, right? So it depends on your perspective to see whether this is bearish or bullish. But regardless, we're below the June lows. We were. But if you look at some stocks, I found out, some of the most important stocks that carried the market that did not go down to the June lows are, for example, Amazon. Okay? So Amazon was at 102 something. Now it's at 120. It only went down to 113. So you could argue that Amazon's forming a higher low. Let's take a look at another champ, Apple. Apple went all the way down to 130. And it only stopped out at 138 before this recent bounce. So you could argue that Apple formed a higher low. Tesla's in the process of forming a low, but in June it was 211, excuse me, and now it's forming a new lower low, potentially at around the 240 mark on pretty high volume. Now this one's still yet to be determined, but and some stocks that never even thought about the June lows, stocks like United Healthcare, look at this. Their June low was 452, and now it only bottomed out at 505. This is what I'm talking about, right? This is what forming a higher low looks like. So this company is absolutely killing it. It's crushing it. Another company in the similar field is crushing it. It's CVS compared to June lows. Look at these June lows, 88. It only bottomed out at like 95, and now it's over 100. So these are basically the stocks that are killing it relative to the market, and they're forming higher lows. Unfortunately, most of the stocks in the S&P 500 don't look like that. So let's say, for example, let's take a look at another market mover like Google. Let's go to line chart because it's a little easier to read. This is a typical stock. Okay, so here are the June lows, 105. Now it's currently sitting below the June lows, and it bottomed out at 96. It's forming a lower low, and this is typical. I mean, you can take any stock really. Let's take Nvidia. Go to line chart because it's easier to read. Boom, June lows, lower low. Do you see this? Formed a lower low. So it's pretty depressing if you look at any other stocks. So it's just really the champs, and I'm not sure. I think that the companies, from my estimation, my opinion, I guess, which is, I don't know how much that's worth, but it's other people's opinions too, is that the strongest, best stocks fall last, they fall least, and they recover first. So if we're looking at a recovery here, then Apple, Amazon is where you want to be, and United Healthcare, CVS. These are basically the market leaders right now, and Tesla. Okay, so these are the people, these are the companies that are forming higher lows. So if you put a portfolio of those companies, like if what I'm saying is correct or has any kind of kernel of truth, then those are the stocks you want to be in. Currently, I only have Apple, but you know what? I might take my own advice. I may pull in some Amazon if the market ever rebounds, and I get some cash to play with. I might buy some Amazon, some United Healthcare, and some Tesla. Who knows? Might finally own some Tesla, although the fundamentals won't let me. So, but any other stock you pick, I mean, it looks pretty bad. Obviously with the exception of energy. But let's take Visa. Let's go to line chart. Visa is forming a new low. Take what's another big player here? Meta. Meta's been awful, right? Let's take a look at Meta. Meta's wish it was a June. It was performing well in June. It was like 170, 180. Now it's 135, 138. So definitely forming new lows. I mean, all the big market movers. Telecoms are doing bad. Let's look at Verizon. Verizon, look at this. So virtually any important stock other than the ones I named are forming low lows compared to June or even May. Look, Verizon's doing horrible. Let's exit some of these. Okay, pick a stock. I mean, what about Disney? Let's take a look at Disney. I've talked about Disney before. Oh, look at this. Market leader. We found another one. So Disney actually bottomed down in July apparently, and if it's forming a higher low. So Disney might be a buy if you believe technical analysis, or at least this type of technical analysis. Let's see Procter and Gamble. Traditional stock here. Line chart, easier to read. Forming a lower low. So everywhere else you look, it's pretty depressing. How about J&J? I think J&J also formed a lower low. Yeah. So lower than June lows. It hasn't even climbed back up yet from those positions. MasterCard, Visa MasterCard, lower low. Who shall we look at? Let's take a look at S&P, some international stuff. Lower low. Alibaba, how are the Chinese stocks doing? Struggling, lower low still. I mean, virtually everywhere else you look. Let's see. Let's take a look at some energy. Look at ExxonMobil just crushing it. Chevron crushing it. Shell crushing. Actually, let's see how Shell's doing. Oh yeah, it bounced above the June lows and now it's back at 54. Not bad. I don't even need to look at Exxon. So there you go, guys. Market's doing pretty bad overall. The index S&P 500 index could have had a lower like a false breakdown and then a bounce right up top or a rejection rally. But we don't know. The market leaders are forming lower highs. Higher lows, and most of the stocks are forming lower lows. So we don't know what to believe. Like, if you're in the opinion that the market leaders are going to pull the market up, the index up, then you want to be long. If you think that the market's going to drag the market leaders down, then you want to be short. Either way, 50-50. I have no idea what's going to happen, but what I am going to do is continue to do what I have been doing, which is trying to play the options market, accumulate stuff under market price, and sell them to collect premium at a predetermined price that I think is a good deal. So I'm just going to be looking for deals. But as far as the overall market direction, I can't really help that. So I'm just going to continue doing what I'm doing, and hopefully it works out for the best. Trying to get that $1 million, it's going to be a challenge. It's proving to be a very, very difficult and challenge, and it's certainly not easy to do, especially doing what I'm doing. Like, I'm not just betting the farm on one option and hopefully it rides it to $1 million, which could happen. You could get a 10xer, but that's very, very rare. Very rare. So, anyways, I'm going to end it right here because this is getting a little too long. Hopefully I'll make another video, another update pretty soon this week. All right, peace out.